All right. Hey, what's up? Good morning. So I'm actually recording right now, so because some people are not able to come in, but that's fine. Um, yeah, I want to show you the tool, man. I think it's time. I think tomorrow I'm gonna be able to release that. It just depends what we take on note, like on the paper here. I have my notepad in front of me right now, so and I kind of like think about something. I was like, man, I didn't put alerts on that. So maybe it's going to take a little bit more, maybe I should put alert before releasing. Yeah. I mean, it's not a big deal if I don't release it without the alert first, but we'll see. Let me just spam the link right here. I want to see if there's more people that can jump in cuz I want more. All right. You're back from vacation? Oh, nice, man. You did the nice vacation. I think a lot of people was in vacation, man. It's like it's so dead. Let me drop the volume a little bit here. Hey, what's up, man? All right, so I don't know if we have some genius in here. Hopefully, right? You guys are genius. I know you are. Um, I want to see if there's anything that might be missing. So I want to make sure, and I'll give you my immediate feedback on that too. So, because basically, I want to launched the alpha version, the pre-alpha version. So the pre-alpha version is basically the initial release. It's basically you guys in the academy that are gonna be able to get access to that to the tool, and it's basically like instead of like releasing the tool publicly to everybody at first, I want to make sure that I have some smarter people that can actually try the tool and see if there's anything that may be missing or maybe bugs. And because that's a big, it sounds like stupid, it is, but it's a big script. I promise you, it's large, man. It took take me like a month or two to code, like, and I've done it, every time a little bit every day, and it took me a lot of time to do that. And it sounds like stupid it is, but it's not. It took me a lot of time to do that. Let me see on Euro USD maybe. It sounds like better. All right. So yeah, I want to make sure that um we're thinking about stuff that may be missing before the initial release, which is the pre-alpha version. But I want to show you a preview of what it looks like too. There's few little thing in the setting I need to do today. It's on my to-do list today. But overall, I think it's pretty much ready, not gonna lie. So again, the same principle apply, right? Same ID of the first version. Like this has been my model for 6 years, like close to 6, 7 years now. So I've been using that as my framework because look, if you remove everything, you don't really know what's going on. you know? Like if you remove everything, you just don't know, right? You just don't know anything. So if you turn that on, automatically all right, this is my previous daily range, so I know what to work with. And then you have the accumulation range of the day, which is more dynamic now. Like this is a calculation, okay? It's this box right there. It's something I never really disclose, and I don't think I'm gonna be disclosing that publicly because that's the way it is. But it's that accumulation range of the day is basically 33.33%. Okay. It's a percentage, specific percentage of the day, um, that is basically, the accumulation range of the day. So that is very specific. So if you, let's say, look at Euro USD, you can see that it started at 7 5 p.m. and it basically at 1 a.m. Okay? Like it's more specific. Like if you jump on Euro USD, you have a different range. And usually on the main version, it was like more basic. It was not having that type of calculation or that type of, so that just that module there was kind of like a little bit of pain to code, right? So just for so like it started at 1 a.m. on Forex. If you remember the kill zone from ICT, it's basically 1 a.m. instead of 2, right? If we look at NQ, that's where you'll recognize that that's the same thing as the previous version. So you can see that this is also 33.33% of the day. Um, and it started at 6 p.m. to 2 a.m. Okay. So that itself is basically a specific range. If you jump on Bitcoin as an example, it's also the same thing. Okay. So it's the same thing, but the daily start at 8 p.m. It open at 8 p.m. and it's basically 4 a.m. before you get a move. So it's all different. Okay, it's all different. It's all dependent the asset you trade. If we go on DXY by example, you'll see it open at. I think there's some missing data here because it's not supposed to be 7:45. But anyways, it doesn't really matter. Like DXY is something broken, right? There's a little bit of thing missing here, and unfortunately, we don't have any other option to get that. If we look at gold, so gold is opening at 6 p.m. So 2 a.m. is the same thing as the original version. You see that zero point 0.5 deviation here? Wow. And if you remember, the original version was having these little red deviation. But the problem with these deviation is there was no label, so you don't really know what you're looking at. And the biggest problem was like these line didn't extend. So like if you're, let's say, on a 1 minute time frame around this area here, you don't really see these line extending where the deviation are. So like that was very important for me to actually do the deviation that extend when they're it. Okay, so like if price hits the deviation, it extend where the deviation is. So I know it sounds like crazy, but it's very insane framework. Like that's the one we're gonna work with um, for that specific purpose of what I've explained in the Booster 21. Um, so again, these are most likely gonna be the setting here that we have to use. Like this is like there's not a lot of I mean there's a lot of setting, but this time the setting are more like aesthetically relevant. So like people, in the last version was complaining about, oh man, I cannot change the color of the line. I'm not able to do anything. Like so, in this version, I want to make sure that people are able to change the line colors and the customization of it, the label size and doing everything they want. So yeah, so basically that's what it is. It sounds like complicated, but it's not really. And that's the key factor here. It's going to be simple. So everybody could be using that without any, problem or anything like that. It's going to be simple. Um, if I double click on the setting here, you see there's few settings that are not correct yet, but you can see that the FX4 model is also available on the weekly and the monthly. So the same concept, the same ID of the FX4 model on the daily is the same thing on the weekly and the monthly. It's the same exact thing. That's the idea, right? So if I jump in on the weekly just for fun right here, well, if I jump on the weekly here for fun, and I like to use the 1 hour instead of 15 minute. Basically, when I go on a daily time frame FX4 mod, I like to use the 15 minute as my overview template. But if I jump on the weekly, I like to use the 1 minute because it's encapsulating more noise and I can see more the directional thing. So you can see right here's the same range, and again that's the same calculation. So it's 33% of the weekly range. Um, so that is itself just a very good information that not gonna be disclosed in the release, official release. So we have the weekly, like Monday accumulation range for weekly time frame. So it's a little bit more than Monday. Like it's literally if on the 1 hour time frame, it's 2 days and 8 hours. Okay. But if you look into where it goes, like it's still aligning with the daily time frame as well. Look, it's 2 a.m. in the morning here on Wednesday. Okay, so Wednesday, basically this was yesterday, rated the lows of the accumulation range of the week, sell side, accumulation on the buy side, reaching for the high of the week, reach for zero point 0.5 standard deviation, alpha deviation between zero point 0.5 and 1. So that's midpoint of that. These are not, I don't have to put these deviation because otherwise it's going to be too much. But we can be more precise. But just by eyeballing it, you can see in between 1 and zero point 0.5. You get 0.75 here. And that was basically an expansion on that. And now market is absolutely scuffed. That's fine. But that's basically what it is. So this is the previous weekly range right here from 6 p.m. on Sunday, 20 July to basically Sunday at 6 p.m. on 27. So everything is calibrated and perfect for that type of stuff. So this is just an example on the weekly, but there's also the monthly here. And that's the same thing on the monthly too. And on the monthly, I like to use the 4 hour for my perspective. Otherwise, you have too much data. Your chart's going to be a little bit cluttered. You don't really see anything. We have the monthly open. So you can see right here on the. So basically, when you go in the monthly and the weekly, what do you have more than usually? Is you have the monthly open price. On the weekly, you have the weekly open price. And if you go on the daily, you have 6 p.m. or 17 p.m. or whatever time it is, depending of the asset. But you have the specific daily open. The vertical lines show you where the new periods start. Okay, so that's the important factor. That vertical line is customizable. So if you don't like it, you can remove it relative to that previous version, which doesn't allow to change that. Can we see the monthly from the 4 hour? Yeah, I'm on the 4 hour right now. But if I jump on a 12 hour, I can see it too. It's still working. It's the same thing. Just you have like a little bit more condensed candle here. Same thing. And you see the standard deviation apply on the range of the accumulation range of the month. You can see I'll remove this. Um, and you can see like reach zero point 0.5, small retracement, expansion, reaching for 1, retracement, expansion, reaching in between 1 and 1.5. So you get 1.25, reaching for that. But these are like, let's say the monthly and the weekly are more like for a little bit of scalp. What's the 33.33%? That's the accumulation range calculation. But it doesn't really matter because the buck's gonna be plot anyways. The buck's gonna plot anyways. Like it doesn't change anything. Let me jump back on the daily here. And when I use the daily, I like to use the 15-minute. OWR, AMR. What does that mean? ADR. What does that mean? No, it's not an average or anything like that. It's a fixed static calculation. Like it's like like if I explain a different way, I guess. You know, you have the month, and your month basically start right here as a vertical line, which the periods start where you have the vertical line, and basically you reach for the 100% progression of the month, or basically the end of the month, right? Your full period of time of the month. And what I did is basically having a 33% accumulation range right there. So it's 30, like, let's say this is 0%, this is 100%, so like 33.33. So you're basically dividing your period by three, and you get 1/3 of that. That's the idea. And it's always been like that. Just, nobody really deserved the information, to be honest. So it doesn't matter because the Bucks is going to be there anyways. Have you checked the holidays where future merged the daily candle? Y- I'm not sure, to be honest. I don't know. I don't really know if I haven't looked into. These gonna be a little bit complicated to fix because it's a hole in the data, and you know I'm not sure if I'm gonna be able to fix that. It's literally just because the chart is missing data. So like the tool is like, all right, I have to do my work and it's not there. So what I'm doing, I'm just plotting it this way. But I don't know. Like I think we have to verify that for sure. That's gonna be part of the whole thing, right? An ADR? No, it's not an ADR at all. It's just basically a percentage based portion, like a fraction of the month. That's it. It's a fraction of the week, fraction of the day. Like you're dividing your day by three, so you get like everything can be calculated by you can divide like an apple by three, right? Well, like I said, I don't have to go like too deep in mathematics because again, that's just gonna like basically put you on the wrong track. It's not the idea. Like the range is being plot, that's fine. That's the accumulation range. You can work with it. That's basically what it is. It's not complicated. Yeah, so the whole month from 0% to 100% completion, right? When the month is done, you have 100% of the month completed. That makes sense, right? Like you have a 24-hour period of time, and that period of time can be divided by three. So, but that give you a specific percentage of the day, basically. Yeah, it's simple, man. Just don't overcomplicate it. There's no average thing or no like whatever trash statistical thing or there's nothing like that. It's not complicated. Everybody's like trying to predict things, and I'm not. I'm just like giving you static framework, which is the most reliable thing you can use. uh, maybe soon. I'm not sure yet, to be honest. There's a lot of work on that still. But the main framework, the main thing, the main the main stuff I'm pushing like right now, and the whole thing I want to use is really the FX4 model. Like this is my own model for the last 6 7 years now. So and the previous version of the whole tool was basically obsolete. Was not valid anymore. There's a lot of thing that needs to be changed, and I don't have any communication with the owner of this group, so that's the way it is. Uh, so that's basically the reason why I have to do the whole thing again on my own. That's fine. I'm walking alone. I'm great. I'm happy with that. Daily time frame use a 8 hour accumulation range. So yeah, exactly. If you divide your day by three, how many hours it give you? Like take 24 hour and divide it by three on your calculator. Like I'll do it in front of you right now. If you use a calculator, use 24 hour divided by three, it give you an 8 hour, right? So if I use this calculation metric here, it give me 8 hour here, right? How to access the alpha ver? It's not released yet, man. I wish I can release it right now, but that the whole point of that meeting or that Discord live stream right now is basically to show you a little bit what it looks like, explain a little bit the setting and stuff like that, and basically asking for any suggestion last minute. So if let's say there's someone that have a really good idea right now to put it on before the release, like I have my notepad, so I want to make sure there's maybe, oh man, this would be a great idea. So I'll consider everything right now. But generally speaking, it's basically the and that's basically what it's gonna be. Very simple, uncomplicated. So there are a few timestamp on that are very relevant for us. We have the 6 p.m. price, which is basically your daily open, right? This one's gonna be variable based on the actual asset that you trade. So basically, if that vertical line here is at 5 p.m., so that 6 p.m. opening price is gonna be 5 p.m. instead. So that is itself dynamic. It changed depending on the asset you trade. But if you trade NQ, it's gonna be 6 p.m. Then you have midnight open, which we already have on the previous version. The only problem with it is there's no way to deactivate the vertical line. I don't like using a vertical line at midnight. I think it's not relevant at all. It's just my honest opinion. And that's why I have like only a simple line like this. Very simple. Then what else do we need? Like the 9:30 open. That's where the opening range of the AM sessions start. That's where the injection of liquidity come in the market or the equity open of New York. So you want to have the 9:30 line to, like, if I explain it a different way, right? The FX4 model is a framework that help you understand where price is relative to all these components. Okay. So if you have like price right here, right? And you have all of these marks or these like lines or these labels that give you an idea where price is relative to everything, where it is. That's a framework, right? So what we're doing with it is we're actually framing the price in a very specific manner. So it's like I said, if we remove everything, like, do you know where the price is right now? You don't know, right? It's just like it sounds like it's just basically in a random area here. Yeah, you guys gonna have access, but I think it's gonna be more tomorrow. I'm not sure yet because, like I said, it's a last minute call for new change or anything like. I'm showing you what I have right now. If there's anything missing or anything that you might think that might be better in the different way. Like it's basically the last call, you know what I mean? Before I basically launch it the way it's gonna be. Um, so I'm basically opening the door for suggestion if there is any suggestion, but before I need to show you what it looks like. It's not released. I'm the only guy on the planet right now having this tool. So how about some option to change color of candle to identify or mark IMDX? Like most of indicator, we can change. So the accumulation range only have the high and the low because it's more simple visually. That's the thing, right? When you have a framework, you have to be a little bit more consistent on the components you have. Like if there's too many, what were you gonna get basically as a result is basically you're gonna just get lost, right? So that my idea of that was basically to have a more simple way to see things. Like if you ask me right now what I need to make money every single day, is I would say like this is what I need. Because like I said, if I remove everything, I have to plot it manually, so it's gonna take me, you know, not an hour, but it's gonna take me 15 to 20 minutes just to plot these lines. And the problem with that is if I move the line and it's not locked, like now the whole thing can change, and my perception is broken. So the whole idea that basically you showed up in the chart and you already have this thing plot, so immediately you get like an eye overview what's going on, where price is relative to everything. That's my idea. So, and that's been the whole idea since the beginning, right? So your idea is to show like it's not a mechanical trash or garbage like model that like, everybody tried to do with it. I know there's a lot of people trying to do mechanical thing with it at the beginning, but that's not the whole point. Like, the whole point is to know where price is relative to everything. When you know that, automatically you can macro scale or zoom in and find a setup that align with it. It's very simple. Um, but let me explain real quick, right? What it has like in terms of components. So you guys know you see the standard deviation. These are specific deviation where the liquidity are being injected at 2 a.m. in the morning. Okay, so right before 2 a.m. or right before the accumulation range is closed, this is not really the best area to trade. Okay, this area here. Is this gonna be used later on as a potential handshake or anything like that? It's gonna be used in the future as a potential transaction of big size, right? So you can see right here that at 2 a.m. and this is just an example right here. I'm basically replaying. I'm actually not replaying. This is basically what happened last night. But you can see right here there's the 2 a.m. opening price, which is basically London open, right? We have a kill zone here. What happened is that we're accumulating buy side above these relative equal high. A distribution started at 3:45 and 4 a.m. Right? You guys know, right? Candle go up, it's an accumulation. Candle go down, it's a distribution. So just there, man, that's a massive jump. Yeah, it's a massive, massive jump. Just the color of the candle give you everything you need. Like, right? A green candle's an accumulation, a black candle's a distribution. Like, don't mix it up too much. Keep it simple. That's what I'm trying to. Market is binary, right? It's going up, it's going down. That's it. Um, so we know there's an accumulation here. There's a distribution starting here. We have midnight open as a reference point of area, a very nice point of interest in terms of where we are relative to the open. So we open in deep premium above previous daily high. open above the accumulation range. Didn't reach for 0.5. Creating the high of the day right here. And for some reason, what? I think there's maybe a bug right now. You have to look it back and find out because there's no tooltips anymore on the. Used to have tooltips on that, so maybe have broken something. I need to verify that. You see, these are the last change I need to note on my notepad. So like, let me see. Tooltips do not show up. There's always something you find a little bit, before or after you've done the whole thing. But usually, like you put your mouse right here and it says like what time the high of the day has been formed. So the time was basically 3:45 a.m. in the morning. So if you put your mouse over that, usually it says like 3:45 a.m. right there. If you put your mouse over, and midnight open, it's the same thing. It's going to give you basically where it started. 9:30 right there. It's the same thing. You can have the price on the tooltip here. So 9:30 is basically an open, a specific open that we have to track where price wants to go from there, from that specific level, right? Just by eyeballing it, you can see the 9:30 is basically in midpoint of the accumulation range, basically the high and the low right there. 9:30 open and midpoint of that, and the objective was basically the low of the day right here. This was the low of the day at that time. If I replay a little bit before 9:30, you'll see right now. See, low of the day was right here. So that side of the accumulation range was basically intact and ready for and shake as a distribution cycle, and you can see 9:30 coming into the play and just basically dump it, right? That's what I mean basically this morning by the announcement I've done, saying like the market is very imbalanced. Like this is not an efficient delivery. It's literally just someone that basically dumped the whole thing. That's like these conditions or these type of stuff uh are relatively something you don't really want to trade personally. And same thing happened here on the close of the market. So, that's why we're not live on YouTube right now. We're back to 6 p.m. open here. Let me just close this. You see price go back for 6 p.m. opening price, basically the daily open, right? You can see right here. Go back for 6 p.m. as an inversion. So that 6 p.m. Uh, that 6 p.m. opening price is also an higher time frame order block because you're using an opening price of specific 6 p.m. right? So that itself can be utilized as an inversion or an order block if price trade below that level. Makes sense, right? We got an inside bar right here at 10 a.m. 1 15-minute inside bar. There's a distribution color change and alert option. So color change is available right now. Like I said, the alert. I basically think about it this morning. I said, "Look, man, I don't know if you were there when I started like the whole thing, but I said, there's 100% the alerts missing. But what type of alert you guys think it will be nice? Potentially what previous daily high, previous daily low alerts, right? Previous weekly high, previous monthly high. Standard deviation would be nice, I believe. Accumulation range high, previous day equilibrium. Okay, so look, I'm gonna note that. All right. Previous daily high, previous daily low, previous weekly high, previous weekly low, previous monthly high, previous monthly low, EQ of all three. Um, Standard deviation. That's gonna. I don't think it's gonna be able to release tomorrow then, because it's a lot of work. Standard deviation, but it's not a big deal. I want to make sure that it's perfect before I release it. You know what I mean? Like I don't want to release it and just like remake it and like this is the last time I'm coding an indicator after that. This is my last uh weapon or massive bomb I'm basically building. That's it. I don't need anything else after. That's why I'm doing a pre-alpha version. I'm gonna do an alpha version. I'm gonna do a beta version, and then from the beta, it's gonna be an official public version, and it's gonna be on TradingView. You click indicator, you type FX4M, and it's gonna be there. Like nobody has to like jump into like a funnel or anything crappy like that. I don't want to be part of that anymore. Right? I'm helping other people, and that's it. Standard deviation, accumulation range. Yeah, they always been very useful, all of them. The biggest problem is I have too many things. I have too many things. Just people is confused as fuck, right? Like the people that are there from the beginning. Everybody that come into my stuff and they're like, man, this guy is absolutely on the roof and I'm on the bottom floor. How the fuck I can you know, talk to the guy on the roof. Like, at where do I go, right? So like, it's just like too confusing for everybody. That I want. That's why I'm basically uh, I'm basically dropping by the stairs and I'm just like showing you from the bottom. Then that's fine. I know my route to go back up. Right, that's fine. Um, like even on my YouTube right now, I basically turn off the visibility of a lot of my videos because I want to make it more simple. Like people are they're so confused, man. And I've been stuck for like 2 3 months. Like there's nobody like joining the Discord anymore. There's nobody uh following me on Twitter. There's nothing going on. Like literally people are absolutely stuck there. So that's fine. Like where you are, I'm gonna jump. I'm gonna go back and find you where you are. That's it. That's basically my idea here. And that's why like I think I lost a lot of people that just never been able to find me basically on the other side of the curve. And it's basically I'm basically it's like everybody in the smart run reversal, but I'm still in the I'm on last stage of delivery. You know what I mean? Like it's we're kind of like far. Yeah, that's why I'm going back up. That's fine. I'm not scared to go back up and find where people have I have a journal of everything, so I know where people uh being confused. So I can go back there and just rework that way. Like there's no, it's not for me. It's not a regression. It's basically just doing what I have to do. Uh, cause man, like I'm telling you, this is all I need. I don't need anything else. Like if I want to be really honest with you, I don't need anything else. I've tune up the language from ICT to basically fill the gap that are missing. It didn't tell you like, oh, price going up, it's an accumulation. Oh, price going down, it's a distribution. So if it didn't tell you that, like it's because you want people to find out. But I'm a little bit generous, so I try to help other people. So I'm basically providing that information. But if you don't understand that, like now you're basically lost again. I just feel that the entire industry right now is absolutely lost in the sauce. Too many like alpha thing, and it's just everybody's so lost, man. So you got a lot of people giving up. Like it's wild, man. But that's fine. I'm returning it the other way. Yeah, this is nice, right? That's fine. Yeah, I realize it because the biggest problem is if I didn't realize that, I would continue what I'm doing. It's just like more people will get lost eventually. And at the end of the day, like I'm gonna have like 3 person listening to me. So like it's like that's fine, right? I'm happy for these 3 people, but I want to help more people, That's my goal. So um, you know, if I can generalize the whole thing and help a broader large amount of people, that'd be great, That's the way it is. Like I know absolutely, like if I didn't know I have the ability to help these people, I would just not doing it. Right. So I have the ability, I know I can do it. And I promise, and I'm gonna do it. So I'm gonna find a way. All right. You see now sell side has been delivered here below that bullish candle right here. Is a distribution, right? So that 15 minute, only that 15 minute could have pay your salary here, right? Um, with only one, right? So you get like that candle close right there. You have a low resistance right here, and basically the next candle is basically distributing these two low, and it align with the whole thing. So basically, when you know that there's a 15 minute that potentially can go for that, now you have to go back on the lower time frame, right? Otherwise, like you don't really see it. Like you can stay on 15 minute, but you don't really know what's going on inside of that 15 minutes. So the whole point and the whole idea that is like your let me find out how I can basically verbalize that a little bit better. Um, I promise you, I try to find a way to really make these things like easier for everybody. Like, cause man, this is life changing. It changed my own life, So I want your life to be changed too. That'd be nice, Um, mm, 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 mm. And as I explained, multiple time, I guess, that's fine. We're just gonna re-explain. I'll try to find a way, Eventually, like if I explain all the different way possible, everybody's gonna eventually, caught up on it. You know what I mean? Oh man, now I can understand because that explanation was clear. It's not that it's not but that I'm a bad teacher or anything like that. It's just these things are not easy to understand. That's just the way it is. There's like so many like people are so confused by the time frame, but the time frame just give you more clarity over time. Like you're basically starting from a higher time frame perspective here. You know that oh man, this is the daily time frame here. The daily time frame is basically moving up and down the whole fucking day. But when you know that you're close from the sell side here, right? Let's say this is the sell side here. What I mean by the sell side is I mean that this is the low of the day right here. Because this is the daily. Like I'm gonna type it right here, so make sure people that actually come in or whatever they're not confused. Okay, so price is creating the low of the day right here, right? That's fine. We know that. We understand that. Then price is retracing inside the range, making the wicks visible on the daily time frame here. Okay, you see the wicks, like the wicks is showing up right here. Now you're like, oh, okay. What's the reason of that retracement? What's the reason of that retrace? What do you think about that? Why is there a retracement here? Because the market just distributed here. If it's imbalance, like if the distribution occur fast or quick, there's potentially imbalances here in the lower time frame. So the whole idea of that retracement right here is basically all right. I'm gonna retrace the imbalance here and I'm gonna find a fair value. So I'm gonna find out some fair value of one of the time frame that are visible on the lower time frame, obviously. But to rebalance. Yeah, exactly. So price is retracing because the order flow of this daily candle is bearish. So the expansion occurred on the sell side as a distribution. That's a distribution of the daily. And the wicks is basically just the mark or the shadow of where the distribution already occurred in the past, right? You're able to see, all right, price already above the opening price, right? This is the opening price of the day right here. So we have this on the FX4 model. So it's basically 6 p.m. I'm going to put the text on the left side and I'll use like a black line. I think it's going to be simple. I'll use like that dotted line here because it's a dotted line I use on the model itself. So look, 6 p.m. here, right? We have the 6 p.m. here. That's where the whole thing started. The first data tick print or the first little spark, right? Little like the little start of the day was right here at this specific price. Okay, the price is this price. So that's 6 p.m. important. That 6 p.m. level is very important because that's how you're gonna be able to see where the top wicks of the day is gonna be and where the bottom wicks of the day is gonna be and where the distribution or the accumulation or the expansion occur. Right. So like I said at the beginning, let's start with a real day. All right. A note function? I don't think so. I don't think so. I think there's a lot of watermark because the thing is if the more function I put on the tool, right, and I'm not saying that there's not useful function that we can use or put, just the more stuff I put into, the more slow it becomes too. So I want this tool to be fast and very I want it to be executive, right? I want it to be quick and very, you know, not because if it's, I got tools in the back then that were very too slow and it just, it make the whole process clunky. When you change the time frame, let's say you go into 5 minutes, you gotta wait a few seconds, a little bit like I have look. I'll just not say anything, right? But there's different tool I've tried recently that um when you change the time frame you have to wait few seconds. These second are worth my money, right? So like I need to have like a responsive script. I want something that is quick. So that whole framework here took me a while to make it quick. I want a lot of information, a lot of framework that stuff to plot, but I want these things to be quick, because time is valuable, man. Like, if you wait 3 seconds multiple time a day, you can waste 15 minutes easily, right? So these 15 minutes can be used to make money instead. It can be used to live your life. It can be used to cook a meal. It can be used for go to gym. That 15 minutes is a waste of time. So yeah, I want the script to be extremely quick so we don't have to fucking wait about it. So adding more stuff sometime it's nice, but like my 30-minute opening range is pretty borderline to be slow, right? It's a little bit borderline to be slow. CPT indicators, that one has to increase the performance of that like extremely. It's a lot of rectangles and stuff, and that is slow as fuck. I don't like it. So that's why I'm not releasing it. Same thing with the end walk. Still too long. But the FX4 model right now is extremely quick. Okay, this thing is a beast. Okay. All right. So this is how the daily start right there, right? Like it start with basically nothing, right? Start with the tiny wicks on the bottom and the top right there with an initial value of 6 p.m. And then eventually what's going to happen, it's basically, these are the thing we don't really care because at the beginning of the day, it's basically, doing whatever the fuck he wants, right? Like it's going to build like something, which is fine. That's what we're kind of like waiting. The beginning of the day, we're going to be like, all right, like this is what we're working with now because it's already printed, while I was asleep or whatever. It's done a little bit of work, so we have something to work with. Have a good day, man. Bye bye. So it's 100% starting with a consolidation at the beginning of the day because otherwise you have nothing, right? So that's the whole idea. So you're kind of like waiting for some prince, like it's gonna be doing whatever he wants to do, and then from there you have like a high and a low of the day that's gonna be formed, right? So you have the high of the day, the low of the day. That high and low, right? Open, high, low, close. We're in always Chelsea Academy, right? You guys understand that for sure. Hopefully at that point. So that body here, right, is the order flow basically. And the body is described as a distribution if it's black, and if it is green, it's an accumulation. So we're accumulating above 6 p.m., we're distributing below 6 p.m. Yeah, that's simple, isn't it? Hopefully it is. Um, if you get the daily like this with the body like that, right? And you have the low of the day right here. I'm gonna reuse that line right here. And let's just like, put a little bit of perspective here. We actually reached for the previous daily high right here. So this was the previous daily high. Okay. So we take that previous daily high as an accumulation. So basically the candle was like green like this. Let me put the body green just for your understanding here. Okay, so that was like this, right? And mm, this has to be on the front. So the body's like this, take the previous daily high, right? And eventually it basically decrease and you're like, oh, this is a retracement to go higher, right? But when it go back below 6 p.m., you're like, oh, okay, now it maybe doesn't want to go higher. Now it wants to go back for the low here, right? Because it's gonna seek for an external range, right? So the external range is the high and the low of the day. That's what where you're working with. So right here, obviously the body is gonna be flipped to a bearish body because we're below 6 p.m. So that box is changing depending of the flip, right? You guys understand that. Uh so let's say you get something like this, right? So where your setup's gonna be now, right? So there's a setup right here in between that current price and the low of the day right here. And what type of setup it's gonna be, right? What type of setup it's gonna be? It's gonna be a sell side distribution, right? So you know that you don't have to guess that. You don't have to predict anything, right? You know that there's a potential sell side distribution going on or potential ID forming. So from there, right? Now you know on the daily, this is only the daily time frame. But the multiple time frame, let's say we go on the 5 minute chart, right? So the 5 minutes gonna look like something like this is 6 p.m. opening price. You have basically the high of the day right here. We have the change in state of delivery here, right? We have the low of the day form, which is basically right here. There's a retracement right here. Okay, look at this. Like, stay with me, right? We got a retracement right there. There's potentially a sell side imbalance right here. That's the main reason of that retracement. And from that retracement, we got an expansion again. So that's what we trying to capitalize on as a setup. Okay. So if price is right here, right? Like this is the same thing right here. So you just see it on a lower time frame perspective, basically. Because on the daily you only see that there's nothing really to be, you can see the setup but you don't really investigate a lower time frame, so you have to go on lower time frame and find this out. And from that retracement here, right? Like I said, there's a potential. There's a potential here. Imbalances here. Okay. I don't know why I'm using this color, but okay, red is fine. Potential imbalance here. As price is rating the actual low of the day right here, it create an imbalance right there. I'm not saying like, all right, go and find this out. Absolutely. It's not, it's never gonna be like this exactly. But it's extremely similar from time to time. And eventually when you know all the variation, you're able to engage in doing the same thing. So from that imbalance here, the setup or the IDs to go back for the sell side of the day right here. Okay, so you know that this is the external range of the day. You know the high has been taken the previous daily high as and very good confluences, and price is re-extending or re-expanding the day right here. So now your daily though is basically like this, and the body's gonna be like this. Okay? From there, okay, from there, let's say like we're here right now. Okay, so from here, what are we basically looking for? Is a retracement inside the range. Okay, that's a retracement. Well, you guys know, right? That we've talked about that in the Booster 21. Like it's very obvious. It's very simple. This is not complicated thing, I believe. So from here, right, this is the new low of the day. So we're forming a new low of the day, right? This has to be a little bit lower, otherwise it's gonna be complicated for you to understand. Uh, so from the low of the day, price is retracing inside or internally, right? It's an internal price delivery. So what is seeking for is seeking for any sort of imbalance. That's the ID, right? And from here, the same thing apply again. Look, it's the retracement inside the range, and then we're looking for another distribution expansion. Okay, so we're looking back to return for the low of the day. So we're in a large expansion on the day right here. That's a sell side distribution. That's a distribution. So from here, prices start distributing again and expand the daily range. Okay? And now we have a new low of the day right here. So from here, it's going to retrace again. Right? It's repeating the same thing again and again and again and again and again and again until we die. Okay? It's the same thing. It's the same thing. Literally until we die, right? Same thing, same thing, same thing, same thing. Uh, these open price, right? When we plot an order block, we always use open price. Okay, always, and that the reason why I've done recording an OBS on that. This doesn't go on YouTube. Okay, this is not going on YouTube. Sorry about it, but it's not going on you like this because other like fucking mentors gonna use my stuff, right? And it's just gonna be all over the place again, and I'm gonna lose the exclusivity or even like whatever. Um, Nobody understand that. And nobody understand that. And I'm telling you right now, nobody understand. If you understand that right now, you're way beyond these fucking guys, right? It's simple. It's like it's not complicated. So now let's go back on my model, all right? Because that's the whole idea, the whole district, the whole thing, all right? All right. So where's the 6 p.m. opening price on that? It's right here. That's your daily open right here. Okay? Right here. Okay. Uh so your daily candle right now has a body like this. And the top wick of the daily is basically right here. Okay? So all of this is gone. It's only a wick on the daily right now. There's nothing right there. Yeah, all of this is gone. You understand my point here? Guys, if you're not following me, like, please let me know, all right? So, remind me of the skeleton? Yeah, that's the whole thing. That's the thing, right? So, look, the body is above the opening price of the day, 6 p.m. It's accumulating. Accumulation, 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 accumulation. Create the high of the day right here. Okay? That's the high of the day right there. Right here. That line that you see, it's included in the tool. Like, that's a very important factor for me. All right. It's there. That's the high of the day right here. Right there. This line right here. From here, right, there's a distribution, that star right there. And we can potentially at the beginning maybe think, or maybe believe, that this is a retracement for a potential expansion again. But now we have midnight open here. Okay. That midnight open has the same exact function as the 6 p.m., but it's later in time. So you have two very important reference point that you can use to actually know where price is relative to the whole thing. Okay, that's the whole point, whole idea of the FX4 model. It's to know where price is relative to where we are with these marking stuff. Okay, simple as that. So the same thing occur right here, right? Is you have, I'm gonna basically, you have an accumulation from midnight open right there above midnight open. But when we reach below midnight open, we can use midnight open as an order block. Okay. You can see the body right there. Look at how they reject these level here. And we know that there's no distribution during that day so far. We're above the previous daily high right here. We have a large imbalance on the buy side right here that potentially price could return, right, to actually rebalance that problem here. So that being said, we have the distribution from midnight that returned to 6 p.m. So from midnight to 6 p.m., that's a nice end shake right there. That's a nice distribution. But more specifically, we have the 6 p.m. to actual low of the day right here, which is pretty much the distribution for the day. Like, so, and there's also the distribution from midnight as well. Like, these are two nice distribution, and these are not green, but they're black, right? Because they're a distribution sell side. So we're below the open price in midnight and 6 p.m. But if we add a little bit more confluences here, so we have the 930 right there. That's also another order block right here. As price is distributing below 930, we have no business to look for buy. Makes sense, right? And you know, it's the same thing. Like, now we're reaching for the deviation. Why are we using deviation, you think? Because there's no data here for that day. So we have to use projection base of what's the actual day does, basically. And the whole idea of that's basically the deviation, or basically projection based on current volatility. Okay, so if the day is a very slow day relative to the previous day right there, the deviation is gonna be smaller. So these deviation are obviously a nice area to take profit. So if you're in a 5 minute time frame right there and you see the point 0.5 taken, you can take some partial here for sure. If you go to one, because there's no data print here, so you don't really know. You have to use the previous day, but the previous day doesn't represent the current day volatility. So the whole idea of that accumulation range is calibrating the volatility based on that day. So that's the whole point of that. Like, it's 33.33% of that day and not the previous day. Like, the previous day PDA rate, previous daily high, previous day equilibrium, previous daily low. These are nice, because they're not too far in time relative to the current day. They're just the previous day, right? But that 8 hour range is basically calibrating these deviation at 2 p.m. at 2 a.m. Sorry, at 2 a.m. you're gonna have these deviation. They don't change. Okay, they're gonna print new one on the next day, but on that day these are the one. So the biggest advantage to use this framework relative to any other framework is this is not statistically based or anything like that. This is basically because look, I'm gonna be honest with you, right? People that use statistic, and the statistic is project from the last 90 days, let's say, right? When you go in summer where the volatilities is lower, or just in general term it's very slower, or it's just like smaller, like where the days are very small, right? They're tight, the range is tight relative to what do we have in December, let's say. um so that tool is basically auto calibrating for the current volatility standpoint. You know what I mean? So if you use a statistical model in the last 90 days or whatever amount of data you're using before, and now you go in the summertime, and there's nothing that works because it's using like data from a high volatility standpoint and projecting these things on a low volatility standpoint. So for sure it's not going to work. Like this is not calibrated. So the whole idea of that model is we're using literally the previous day, and every single day, like over time, these large days gonna recalibrate with time. It's following, you know what I mean? So like like let me give you an example here. So at the beginning of the year, the FX4 model is gonna be big like this, right? Previous daily high, previous daily low. But when you go in August, what is gonna happen? It's gonna be a smaller day. But from here to here, it's naturally going towards this decrease. So it's not using any statistic. It's basically just using the previous day. So that previous day is going to calibrate what type of volatility we're in based over time. So from December to August, let's say you have a decrease, but it's not going to happen like this. It's not going to be black and white. It's going to decrease, you know, over time. It's going to decrease just a little bit every month, and it's going to reach where. So there's a specific mechanics of seasonality that implemented into that, if you understand. But it's fractal, so it's better. So that was my idea when I designed this model, because I was having this problem. Like 1 month I'm super consistent, and the next month it was garbage, and I was like, man, how the fuck? Like because I was based my current month based on that previous month, which is fine. But if you use like the last 6 months, you're like, man, fuck, this is not working at all. Because there's different type of volatility. Like there's less participant in summer, there's more participant in whatever Q1, Q2, right? Q3 you have a little bit less, but at the end of the Q3 you have more than beginning of Q3. And I don't want to make it too complicated to explain, but you guys get my point. That's what make it super fantastic, because it's calculated based on a recent price action. So what's the whole point of the price right now? If you read this chart right there, right, it's rebalancing a previous day equilibrium. It's going back for the previous day equilibrium here. Why? Because prices basically overextend above previous daily high. Like I didn't have this, but look, if I take previous daily, I can see it with my eyes, but my eyes are trained, But if I use my previous day equilibrium, previous daily high, and use that box and I extend it right here, you see we almost reach for one half deviation of the previous daily range, you know. So where's your drawn liquidity here every time you use this framework, basically? So your main drawn liquidity is to aim for an external range. So the external range is ideally the high of the day, the low of the day, right? These are nice. These are very nice because they align with the current order flow of the daily range. Simple, right? Now, if we jump on the 1 minute time frame, yeah, there's more thing you'll see, right? Uh, these bucks are the last 24 hour of 1 hour time. So there's 1 hour, 2 hour, 3 hour, 4, 5, and there's like 24 of the bucks right here. They've been automatically plotted. These are all 1 hour range. Okay, these are 1 hour range. The whole idea that is to keep in mind when you're in the 1 minute that 1 hour perspective. If you don't see that 1 hour perspective, you're gonna be fucked. You're gonna be in trouble for sure. You see, like even on the 1 minute, it's a little bit stretched, right? You can see that the 1 hour they look flat. So if you go in the 5 minute, it's gonna be much more better. You see, like now they don't look flats; they look better. Okay, so here, if we look just for 7 a.m., okay, so this is 7 a.m. right here, that box. So that box right there, 7 a.m., 8 a.m., right? 9 a.m., 10 a.m., and 11 a.m. Okay. If we look at this right here, 8 a.m., but specifically if we look at 7 a.m. right here, we got a distribution below midnight open right here. It's pretty clear, right? It's a pretty strong distribution here. So what would be the best is to wait for a manipulation on that. Where the manipulation is we have the 7 a.m. high, and we also have the 6 a.m. high right there. And we didn't also take the 5 a.m. high right here. So you see, we have 5 a.m. high, right? 6 a.m. high, 7 a.m. high, 8 a.m. high. Okay, so 1, 2, 3, 4. These high right there are a 4 hour high because we combine 4 hour or single hour to basically create a 4 hour PD array just with it. So that's a pretty strong. It's not 100% institutional relative to a daily, weekly, monthly, but still a 4 hour is not bad. Okay, it's pretty good buy side. So as buy side has been taken above midnight open, we see there's a large distribution happening here. This is hard to catch, by the way. You don't really. I would, not try to catch that move. This is wild. Okay, that's what I mean by I'm kind of like done for the day when I saw that. Right. Um. So I'm gonna be honest with you, HM. I'm not gonna use the 4 hour anymore in that specific context. So for me, right, a 4 hour open and close of a 4 hour is absolutely stupid. Right. I feel that the 4 hour open and close, it's not relevant because who decided to put a 4 hour open at this time and a 4 hour close at this time? And you go on DXY and there's a 4 hour at this time and there's a 4 hour at this time. All of these are not good, right? So what I'm doing instead, and don't quit right now because I'm telling you the truth. What I'm doing is I'm calculating for 1 hour high, as I've done right there. So look, 1, 2, 3, Four. Now you have 4 1 hour candles, so that give you a 4 hour candle. But is the open and close of that 4 hours relevant? I don't give a shit about it. I don't give a shit about it. So look, my 4 hour right now, right, is 5 a.m. to 9 a.m. Fucked up, right? That's a real 4 hour. Look, 1, 2, 3, 4. That's a real 4 hour, isn't it? Do you guys get my point here? So that's what I mean by I don't have to use the real open and close from a 4 hour time frame. I absolutely don't give a shit about it. That's what I mean the other day on Twitter by saying that it's an IQ test. Because this is literally stupid. Yeah, 4 hours for 1 hour. But you have to have 4 hour that are all, you know, relatively, the same. So what I mean by that is like, so it's hard a little bit hard to explain, but like you have to have like this 1 hour has to be lower than this previous one. This one has to be lower than this previous one. Because if this one is higher than this one, this is not an hour that count because this one already flushed out that previous high. Appreciate, man. I mean, look, I've been here for so long, man. I'm just a warrior, man. I'm in the trenches, man. And I know it's not easy to understand. I'll find a way to explain that, right? But you understand my point about the 4 hour open and close? That doesn't make sense at all. This is literally stupid, man. Oh, let's put a 4 hour open at like whatever 6 a.m. Like like what the fuck, dude? Get the fuck out. Like why I cannot use like 2 hour before and 2 hours after. So that's why I'm only using 60 minutes. That's fine. Like, look, I can count. All right, 1, 2, 3, 4, 5. All right, this is a 5 hour time frame just by looking at 60 minute range. And I don't lose my vision. I'm on the 5 1 minute. I can see the whole thing. Look, these bucks gonna stay there. There's 24 hour of these bucks. That's more than enough. Like most of the time, if you reach outside a 24 hour period of 1 hour, like I would just basically say, look, just come back tomorrow, man. That's fine. Like otherwise you're working off like outside range like way too much. It's not even relevant. So look, what do we have here? That's the cool part. All right, I'm gonna show you the cool part in 1 minute here. And what I'm doing today is I'm only showing you the FX4 model, new version. Okay, so that's the cool part. You see that 1 hour right here that started at 11 a.m. So the eye of that 1 hour has been formed at 11:06 right here. See, if I place my mouse over that 1 minute here, it says 1 hour 6, uh, 11 and 6 right here. If I put my mouse over that 1 minute specifically, so the high of the hour currently is 11:06. The low of the day plus the low of the hour is 11:16 right there. Okay, and the time itself doesn't really matter. Okay, I don't try to find out the don't try to crack the code. It's fine. Right? You don't give a shit. So what happened during this hour here? If we read that hour here, there's a small accumulation as a retracement from the low of the day because this was the low of the day at that time. Look, you'll see the indicator telling you low of the day right here, 11 a.m. right here. That's a low resistance, isn't it? On the bottom right there in the 1 minute. Okay. We have previous day equilibrium right here, which is a sweet ass draw liquidity or a retracement program on the daily. As I said before, we aiming for an external range. So we have the low of the day right there, which is an external range of the day. We have a sell side imbalance right there with a bearish order block. Okay. Look, sell side imbalance, fair value gap, right? Everybody knows that. Uh that's cool. That's cool. If I move forward a little bit here, 11.6, this is where the high of the hour has been formed. What is this candle telling you right there? That's in hot sauce, or it's also in high resistance CPT right there. Two candles side by side. Bearish order block, right? What do we have on the other side, or the other counter is we have this low resistance liquidity run right there. We have low of the day. We have 11 a.m. low, which is basically imbalance on the sell side. We have 11 a.m. we can utilize as the main order block of the hour, which is the basically the open of the hour or the low, but we're very close from the open. I thought about putting the hour open, but everybody knows that, right? And also the bucks change of color when it go back below the opening price. So as you can see right now, we're potentially forming the hour high wicks. Okay, so this is the wicks of the hour. So like if you think about the open, right, this is basically where the line's gonna cross. Like you have the wicks high right there from that 11.6 high. Okay, so if you put a stop, it has to be above that 100%, because price is reaching for externals. If you reach externally the hour on the 11.6 I, you have to take a loss there 100%. Okay, because otherwise price is delivering. You don't want to be, it's you don't want to get fucked, right? So this is a low resistance right there, CPT. You can see the rebalance has been done. Okay, internally speaking, it's been done. Now we're in expansion following the daily candle expansion, reaching for the low of the day, previous day equilibrium, and also 1:30 p.m. from yesterday, which is basically the PM opening price. Okay. Now look at this. There we go. And also look, reach for 1.5 minus 1.5 deviation. Okay. So your hour top wicks is basically that. So you've engaged on the higher point you can reach. So basically, when the high of the wicks on the 1 hour is formed, change the state of delivery, high resistance there. So you're inside of that, and you're distributing for the low of the day that was like approximately right here, and basically reach for previous equilibrium, potentially reach for standard deviation, because you don't know, right? Like we're externally of the day, so we have to use deviation of the range. You get that? So what is this right now? That's a retracement on the daily time frame, right? We understand. Look, 6 p.m. is right here. Okay, so this is 6 p.m. This is the daily candle. I can see it without even going on the daily time frame, just by looking at this price level here. You guys understand? Follow me, hopefully. Remember, right? All of this is the wicks of the day, high of the day, 6 p.m. All of this is the wicks, right? Nice, 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 cool. And what we try to do here, or what we're doing, we don't try, we're just doing it, right? Is we're actually distributing the hour following that daily here. You see, this is the top wicks of the hour. And the objective was the low of the day. And now we're forming a new low of the day. This is a retracement inside the range, inside the daily too, right? The daily is retracing. We have a wicks in the bottom of the daily. And now it's redistributing for that sell side here. So there's a small setup there. Look, I'm going to look into, right? This is 1 minute. I can go in 15 seconds. I would not recommend always using the 15-second, because at the beginning it's going to be too quick for you. Not an insult, just the reality of it all. Um, kind of like thinking to do these kind of wicks there, but I don't know, man. These it's maybe not the best. Okay, so there's a small setup here. Okay, I'm not giving you a signal, but this potentially a small 54 points. Minus 54 points. If you go there with one contract, you can make a couple dollar there, right? Like literally just a quick salary there. The problem right, is we have a low resistance right there. So we got to keep that in mind. There's a little bit of a sell side imbalance right there that's been rebalanced here. We'll see if it delivered the low of the day the next couple minutes. And I think we're going to be done for the presentation here. Yeah, there's multiple setup. Like there's too many settings that are weird. Have to basically confine them like this, right? It's going to be more clean. General setting, they're simple. You can change daily, weekly, monthly. You can change the label size of previous day equilibrium, stuff like that. You have daily open, show midnight open, show 9:30 open, 1:30 open, show weekly and monthly open, show vertical line at the new period start, accumulation range background color, show high line, show low line, width of the line, range deviation here, day high and low, high of the day, low of the day, the 1 hour. This is basically what I want to refine a little bit. Okay, so we're gonna wait and see what's going on here. If we trade above that high, I would not look for the short anymore. Okay, I would wait a little bit. That high here. Now we have low resistance in between that low right here and this low right here. This is a reaccumulation. So what are the reaccumulating? Is they accumulating all the liquidity above these high? This one right here, right? This one right here, and this one right here, and basically potentially this one here. We'll see. Previous equilibrium here, supporting the ID. Distribution started here on 15-second. There's one started here with a small high resistance, 15-second, right? So it's not insane, but okay, invalidated here that high, that's fine. Like I said, as long as we trade below that high right here, that's fine. Previous equilibrium. I think like we'll see, but price mobility potentially is gonna trade above the like around previous equilibrium for a while now. We'll see. Back to 130 open here. Mm-mm-mm. This is the open of the hour. I think I could put the 1 hour open price. I think that'd be nice. What do you guys think about it? You think the 1 hour opening price would be nice to have? Yes, no, toaster on 5 minute, 1 minute below. So basically in sync with these bucks. Like these bucks, you can show which time frame you want to see these bucks. So you see that gray box right there's only visible below 5 minute, including the 5 minute. Okay, so now we're trading above that high right here. Let's extend that opening price right here a little bit. Oh, it's gonna be only one. That basically the current hour. I think that'd be the best. We don't need the open price of the previous. It doesn't matter. We're working off this 1 hour here, right? Okay, there's low resistance engage right there. This one. Just doing a little bit of tape reading here because why not, right? This is buy side, so I'm gonna mark this buy side and also this buy side. There's two buy side taken here. There's a small distribution starting from that buy side here. Interesting. That candle here. Now the setup potentially gonna be 200 point. No, 20 what? Yeah, 20 point. 200 point. Yeah. Oh, this is nice. This is great. Okay, ID invalidated here. That's fine. We didn't get any entry yet, but okay, we're back to the open price of the hour. Yeah, I think I'm gonna add the hourly open. That'd be really awesome. An awesome feature to have for sure. Because the hourly open is gonna give you automatically the top wick of the hour, bottom wicks of the hour, stuff like that. You'll see here if price is trading above that hourly open, the buck's gonna be green right there. But I think having the line itself would be nice, and I think you guys agree with that. Don't take that trade. Just relax a little bit. All right. It's like I said. This is not a live stream to talk about. Look, you see the green, the buck screen right there. Look, this is because the hour is flipping bullish too. There's a lot of sell sign and bounce right here too. Like, yeah, I can see a swing high right here. That's nice. We actually reached 1.5 standard deviation on the sell side too. So interesting. I'm gonna extend this a little bit here. So market is accumulating. That's an accumulation right there, right? Volume imbalance. These are nice. There's the sell side imbalance right there. There's one little small right here. I would include that. There we go. Mm-hmm. See, this is where I would return to a 1 minute time frame or 5 minute because I don't have any clear direction yet. If you go on a 15 second, you're gonna just trigger too many entry there for no reason. Oh man, I'm gonna short that. Oh, it's keep going higher, like because the 5 minute is bullish here. There's a 5 minute bullish in this area here. So you gotta wait for at least a 5 minute bearish, then you look for the next setup lower. Because you want to be aligning these time frame, right? This was a nice buy side accumulation here above these high. I don't think I'm gonna release tomorrow because there's a little thing that kind of like just trigger in my head. So I'm gonna do the modification this weekend. I don't want to release that too quick, and just being like, oh man, I should have done that. And when I'm releasing something, I want to make sure that it's perfect or close to, near to perfect. All right, this is nice. We're back below the hourly open. Mm-mm-mm. This is Let's say we want a return for the low of the day. We got 57 and no, 200 points. That's pretty wild. By the way, you don't have to trade 200 points to make money, right? Most of the time, I can make money with 30 points. Specifically, if you trade with multiple account, I would rather use 30 points on one account and multiply it, right? That's the idea of trading copiers, not to increase the risk, but decrease the amount of points you reach for, but you multiply it. Mhm. It's the worst time to trade right now, but we're just gonna observe. It's a small order block right there. Let's see if it's respecting that. It's 15-second order block too, but got invalidated here. This has been filled right there. He really wants to make this efficient. You see, now as we trade above the hourly open, I would not look for short because we're above, right? So meaning we're back inside the top wick of the hour. So that hour is bullish right now. But if we go back below the hourly, right now, I can look for my setup here, the realign for these low resistance right there. As price is trading above the hourly, I would rather just not look into. That makes sense, right? And obviously, there's gonna be more. I mean, when the tool is completed, I'm gonna trade with it every day. So you guys gonna see how I do it. How I'm using it, and I'll be obviously adding more gems and explaining more stuff. And we're back inside this imbalance here. That's a pretty large one. I can use middle point. Doot, 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 doot. Look, that itself is an MMX sim right there, right? Initial distribution, smart money reversal, reaccumulation, state, chain of state of delivery. That's fair value gap, right? Redistribution, reaccumulation, redistribution, reaccumulation. Go back for the original imbalance. See, if the day was bullish, this would have been a nice setup here, just like this. Because we use the hourly open as an inversion. That's why I believe that I have to basically add this opening price of the hour. That'd be really good. very close on the hourly high. So now the wicks is basically like this on the hour. This is also something I was thinking about, like using the lowest low to the open price and put a line, let's say line like this that could represent the wicks. And if it's on the other side, it would be this one right here. This is the highest high, 15 second. That would be like this. So you guys could potentially like see the wicks just by seeing that dash line. What do you guys think? 11:45. This is 15-minute close. Because this would be useful, like that line right there would be useful for this kind of stuff, Just returning for that hourly open right there would have been a nice setup too. Or, the same thing when we create a new high from the external range and return inside. That's a nice target to go back at the open price. Price is standing inside the imbalance here. There we go. Back inside. Same thing here, right? 100 points. Reaccumulation here. These are low resistance. Like if I would I'd look for short, I would like for high resistance here. Here's a liquidity here. Seeking for the high, right? Anyways, we're about to be done like 2 3 minutes. I'm gonna close this. But this is basically an overview. I wanted to collect any type of maybe potential modification. Looks like there's multiple uh, thing that I've write on my paper here. So basically, uh, there's some tooltip that doesn't show it up right now. There's some alert missing. Standard deviation, accumulation range, previous daily high, previous daily low, weekly high, blah blah blah. These are nice stuff to have. We talk about the hourly open, and we talk also about the top and bottom wicks. And that'd be nice. Yeah, I'm about to go, man. Just wanna see if we're retaking that 1 hour high. We're very close from it, actually. But remember, right? Price is always gonna seeking an external range. So like this is the external range, 11.6. This is the external range from the low of the day right there. Yeah, oh yeah, it's already there. You see, you can change the label size right there. I think the best feedback's gonna be when you guys have the tool in your hand. You can test it out and find out if there's any weird bugs or anything like that, so we can actually fix it before the alpha version. And also, look, it says right there, right? Current 15-second accumulation distribution. It says in real time what is going on. It's a little bit tricky to follow, but specifically on 15-second. But when you go on a 5 minute, 15 minute, these things are easier to catch. This was the 15-minute close right here. This is the last 15 minute of the hour. There we go. This is a new high of the hour here. So it's seeking the external range. See, that high is not the new. It's the whole this previous high. Now it's the new high right there. That was cool. That was pretty cool. And it's distributing now. See, now you can use this sell side imbalance as an inversion. So let's say right price is distributing lower, retraces, distribute lower, retraces, and go back for the hourly open. There's gonna be a lot of setup, right? But that's fun. That's just fun. Give you so much flexibility. It's like seriously. All right. Anyways, I'm gonna close this. Right. Hopefully you guys learned something. If you didn't learn anything, well, that's fine. But yeah, we're gonna be. I was thinking about releasing the pre-alpha version tomorrow, but with the list I've done right now, there's a little bit of stuff to do right now, so it's gonna be done this weekend. Yeah, it's gonna be posted in the area for sure. I have to put it on YouTube because it's actually 1 hour 49 minutes. But it's gonna be basically not public. It's gonna be a link. So yeah, we'll see, right? I'm gonna work on that this afternoon. Work on that on tomorrow. Tomorrow's an FP, so I'm not treating that shit. Um, Saturday, Sunday, I think Monday. Yeah, Monday's not bad. I think we can potentially start the pre-alpha on Monday. That'd be nice. You see now, like since this is a new high of the hour, that line would have moved right there, like this. You know what I mean? because this is the high of the hour, and we connect the high of the hour with the hourly open. You like that? I think it's great, right? Well, well, well. It's macro coming in. All right, guys. I wish you guys a very good day. Enjoy your weekend. Like it's a 3-day weekend, including tomorrow. If you, I, I would personally not engage tomorrow. Like even if you have a challenge to complete or anything like that, I would just take it off. Like these are risky gamblers' day, right? You're not a gambler, man. I'm telling you, like I've seen so many people blowing their shit out on AFP. So you don't want to ruin everything before the weekend. Otherwise, you're gonna have like your brain working on that the whole weekend, and it's gonna be pain. It's gonna be very bad. So I don't know. Do whatever you want. You know what you have to do. So we catch you on Monday, and I'll keep you guys updated this weekend about what I've done, and what it's gonna be about these things. You see, that was basically the inversion I was talking about, slowly taking place. All right, have a good one, everybody, and we catch Monday. Ciao.